Okay, this is Monday, April 23rd. Welcome to the daily Making Money page of processtrading.com. Want to go over some trades we saw in the market today. I'll first explain the process trading right edge trading system in a little bit of its context. There's two types of trades that can be taken. It can be trend trading, which follows the price bars, the candlesticks up here, along with the process trading VWAP signal and the timing alert dots. I'll explain some more of that in a minute. So you can do trend trading, or you can do discretionary trading, which is what I'm also going to show you here. And that involves these three indicators down here, which is the Inter-G, which stands for internal energy, the sentiment oscillator, which tells you the momentum and the overriding sentiment in real time, and then the short-term trend oscillator. Now, if you're using these discretionary indicators down here to take a trade, you can also say that's taking a counter trend trade or a contrarian trade, however you like to use the nomenclature, but it's discretionary down here, where these have strict rules that apply to them to take the trend trades. Now, on taking the trend trades, the process trading VWAP, when it's primarily yellow, then that shows that it's in a longer term uptrend, and when it's primarily gray, that's when it shows it's in a longer term downtrend. And in order to trade with the trend, you trade along with the process trading VWAP, and if it's yellow, you can only trade the timing alert dots that are below the price bars. And you can only trade to the upside, of course. And if you're taking a short position, and that would be if you're trading with the trend when it's going short and the process trading VWAP is gray, you can only trade the timing alert dots that are above the price bars. And there's a particular trade management technique that I'll mention too that goes along with trading the trend. So today I want to show you what the process trading setup had. And if you want to see more about the setups or the system itself, you can go over to processtrading.com and look at the blogs, or look at the morning forecast, or the daily money-making setups, of which this video is one. So there aren't any real strict rules in taking the counter trend trade. The idea is that all of the indicators, all these custom, non-correlated leading indicators, have to agree with your decision to make that discretionary or counter trend trade. So here you can see the process trading VWAP was yellow, and that says that the trend is up. And so if you're going to take a short trade, which we're doing right here, you're going to be taking a counter trend trade. Here's how the discretionary indicators help you get into that. First of all, the internal energy, you can see that it was strong to the upside because of the green bars. And as soon as the gray bars come in, that shows weakness, as well as does this underscore. There's red and yellow underscores. The red shows weakness and the yellow shows strength. And in particular, the bars turn from green to gray, which shows that the energy is going out of the upward trend. Now, very importantly as well is the sentiment oscillator. And you want to pay close attention to this. Anytime the momentum line crosses the sentiment oscillator, that is a highly probable indication that price is going to continue in that direction. And in particular, in this situation, this is an oscillator, the sentiment oscillator, which is a hard upper bound and lower bound. that are static. Well, the momentum is coming down and crossing down from the upper bound and crossing through the Cinnamon oscillator. The Cinnamon oscillator itself is in a downward slope. So those are very strong indications. Of these three discretionary indicators, you first, I think, would want to look at the Cinnamon oscillator to see where the Cinnamon line is and what its slope is and what the momentum line is. And particularly, you want to get involved when it's at a cross. Now, the Cinnamon line goes from high to low. It fluctuates like that. That's its nature. And the higher probabilities of continuations are when it's at a high or when it's at a low. And when you're reading it in here, actually, this helps keep you out of this whipsaw type of situation. So we have, in our discretionary indicators, we have price, which was strong, now is turning weak with another weak indication here. We see that the momentum is dying off. The sentiment for the uptrend is retracting. And then we go down to the short-term trend oscillator here. The short-term trend oscillator, as you can see, it has an upper bound and a lower bound, but they are movable bounds. To this oscillator acts like an oscillator and a channel at the same time. And this, whereas in the Cinnamon oscillator, this is a median, which is also static. In the short-term trend oscillator, this is, although it's in the middle between the upper and lower bounds, this is not considered just a median. This is a pullback line because price will tend to hit this point and pull back. If it goes through it, you're going to have continuation. Otherwise, just like over here, it hits it, pulls back. So on this particular trade right here, we had the price getting weaker. We had the momentum and the sentiment changing direction, and we down here, for the short-term trend, we had it crossing through the pullback line. So it came from the upper bound and crossed through the pullback line. Now, naturally, if you want to use any of your classical technical analysis as well, that's fine to fit that in. This is all so for your interpretation, so you can make good trading decisions. So right here, this right here is when we could have got in, and you can see there's a doji there. So that the uptrend of the candles come up, it hits a doji, it goes to the next candle, the candle can't break out any higher, and now it starts forming lower highs and lower lows. And within this rectangle, anywhere of these bars, you could have taken a trade to the short side because of these indicators over here and their interpretation. So you would have been good to take any of these, and you would have came down to this point. Now, if you would have came down to this point and you would have got in at the high and out at the low, that would have been 9.5 points, or for just one contract on the SP Emini, that would have been $450. Now, this chart is of the S&P E-mini 1500 tick bar chart. That's primarily what we use on the processtrading.com. So now let's look at our next discretionary trade. And remember, I was saying, look for the sentiment oscillator. Look for when momentum is crossing. So momentum here is crossing the median and going up. So that says there's momentum to the upside. Also, the sentiment line came down to the median, and now it's going back up. So it's not continuing to go down. And you had the short-term trend go up through the pullback line. right at this point here. You also see that on the internal energy, there wasn't the strength of buying in here that there was over here. But again, that is partially of reading all these indicators, what kept us out of this whipsaw type of thing. And now we see that there was some energy to the downside, not strong, and then it turned green again. Okay, it turned green or positive energy when the sentiment turned up, the momentum turned up, and the short-term trend turned up, and the long-term trend turned up. So now anywhere in this rectangle, on any one of these bars, you could have taken the trade to the upside. Had you got in it again at the low and rode it up to the high, that would have been 15.5 points or $775 for one contract. At this high, we're looking at our last discretionary trade, and we can see here it's a discretionary trade or a counter trend trade because we're going against the VWAP. The VWAP says it's in an uptrend, and there's, as I mentioned earlier, there's specific rules that apply when we are using the VWAP to take a trade and trend trade it. But in this case, we're actually going against this or making a contrarian or counter trend trade. So we got out of our previous trade right here, and now we're getting in a trade to the downside. Why are we doing that? Well, we look down to the Intergy. Well, again, we see the internal energy was strong, and now it gets weak right at this point. As soon as the bars turn gray, that's where weakness is coming in. We see additional weakness with the red underscore. Once again, we see the sentiment oscillator with a momentum above the upper bound and crossing through the sentiment line and through the upper bound line. And the upper bound line is starting itself to slope down. When we look at the short-term trend right at this point here was now starting to cross down from the upper bound. So if we got into this trade, this contrarian trade, and we followed our strict trade management rules, which gives us a good risk-reward ratio, if we happen to get into that at the high and took it down to this low point right here, that would have been another 12.5 points or $625 for one contract. So our last trade today that I'll show you right here is a trend trade. The trend trade, remember, we have a gray process trading VWAP line, and it has red. When it's gray and we have a red indication prior to the timing alert dot, that means that we can take a trade to the short side. Now, you can only take the trade to the short side with the timing alert dots that are above the price bars. And the way that you do that with the trade management that we use is you go to the low of the bar that it was on, and you place your order entry 2 points below it. The whole point here is that you're going to sell into weakness. You either buy into strength or you sell into weakness. And so you place your trade 2 points below the low of the bar where the timing alert dot showed up. So that got us in right about here. Now, had you got in at the exact high and out at the exact low again, this would have been another 12.75 points or $637.50 on one contract. But this is a trend trade, and that is the rules, and that's how the trend trade works. But if we look at the discretionary indicators, they should agree with the decision to go short at those points. And in fact, we do see that the energy is coming out of it. It's turning weak because we get a gray bar there, and subsequently goes negative. Also, the sentiment oscillator, again, very importantly, the momentum is crossing through the sentiment oscillator right at that point, and it had just come down from the upper bound. And we also see the short-term trend line here. Although it had turned green, its slope is down, and it had too just crossed through the lower bound. So those are 4 trades today. If you would have played those all just exactly correctly, that would have been around $2,500 for the day. So if you're only trying to make $200 like on one contract, like you had to get 1 point here and 1 point here and 1 point here and 1 point out of this, that would have been $200 or $50,000 a year. So this is part of how you use the indicators on the processtrading.com website. And again, you have the 2 types. You have the trend trading and you have the discretionary signals, which allow you to take counter trend or contrarian trades. So I hope that helps your trading. And if it does, I put these daily money making videos out so you can see the setups that happen every day, time and time again, over on processtrading.com. So if you want to make sure you catch them, go ahead and subscribe, or go ahead over to processtrading.com, and you can look around there to see more about the system itself. So until the next video, I just hope all your trading goes well, and we'll see you then.